Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 49th Commitments of Traders Report of 2022. And as we always do, we shall start off by looking at the largest changes in commercials positions. Before I dive into the review, a reminder, we are going to use the new iCOT intraday indicator with AfterSignal on crude oil at the in the second part of this review, showing you how this tool works and what you can actually benefit by using it. But we're going to start off with our classic COT analysis on the COT reports published by CFTC. You can see this is the 49th report, and it is a report showing data from December the 6th, and it was issued on the 9th. So on Friday, just a typical report. Okay, let's start off. So soybean oil is on top of our list with a 37% change in commercials net positions. We are, of course, analyzing classic or legacy COT data. We do have other data types as well. Of course, we have different, other report types, and we have other data types as well. We are using the futures and options data right now on the classic COT data. Okay, so let's get to it. Commercials are represented with this red line over here, and you can see that this recent change in their net positions is much greater than usual. So you can see on this 1 year time frame, representing roughly 52 weeks, that this change is actually really large. I would say it's the largest change in the past 1 year. And it is a bullish COT change signal coming after a decline that's been going on for a couple weeks now. I think it's a good signal. These are the type of COT change signals that I really enjoy because it is opposite in the direction of the trend. So it suggests in the near term, in the next couple of days, we should see a bounce off of these lows and a bit of a rise in the next couple of days. Moving to the 5 years chart, this gives us more of a wider perspective of what's happening and the chance to examine stress levels in the market. Now, just a couple weeks ago, mid-November, we had actually a bearish COT extreme. Now, not the largest that we've ever seen. We have seen greater extremes in the past. However, it did get close to that territory, and this is something that one has to acknowledge, that you're never going to be able to pinpoint the exact top or the bottom, but stress is building up in one of the directions does tell you a story. And as you can see, we have had a decline in the market, and as that's happening, we're not surprised to see traders moving away from those extreme levels. Now, is this really an extreme point from which we're going to be moving away in this direction? Commercials decreasing their net short, large speculators decreasing their net long levels. Time will tell, but nevertheless, it just comes to show that if you are trading this market, and let's say you have a system set up that says, okay, let's say at this level over here, it might actually be a good time or a good risk reward trade to short the market. Okay, you can see that this is actually a significant resistance, which actually acted as a support at this point. And it is supported by this bearish COT extreme. That could have been a good trade, right? So anyways, we are now witnessing a move away from those bearish COT extreme levels. We have this sudden bullish COT chain signal. So this is something, this is when you start thinking about what you're going to do. You have to be cautious because the trend may have just changed, and we should see further declines in the market. This COT chain signal suggests that we could see a bit of a bounce, but is it going to be enough to really shift the trend and we'd see soybean oil going back towards 70-80 levels? Time will tell. Soybean meal, another soybean market, but interestingly here we have a different signal. We have a bearish COT change signal, okay, and it is coming after we see a rally in this market. So the size of this the change in traders positions is not as unique on a 1-year time frame as it was in soybean oil. We have seen similar changes in the past, but it is large, much greater than average, that's for sure, suggesting weakness coming in the next few days. Moving to the 5 years chart, you can see that we are actually still in a bearish COT extreme territory as the market is headed higher. So quite an interesting situation here, battling between soybean markets. Soybean oil having a different indication of what it's going to do, more of a bullish in the short term and bearish in soybean meal. So quite interesting what's going on over here. Now let's move on and have a look at corn, where we have a 24% change in commercials net positions. Again, you start off by measuring this change size visually, of course, quite easy to do that on the chart. So it is a much greater change than average. We had something similar over here in July. By the way, as you can see, the report date is exactly matching with this bottom over here, from which the market actually bounced up. Now, the only trick here is that you don't get to see this report until Friday. So there is a bit of a time lag over there. So you can really take advantage of this signal. Now, that's why I'm more happy with what I see in soybean oil and soybean meal, because that is, we're seeing that result at a low or top, of course, in case of soybean meal. So nevertheless, this suggests that we should see a bit of a rise coming in the next few days. Moving on to the 5 years chart, you can see that we have moved away from bearish COT extreme levels, however, not reaching those significant bullish stresses that happened in, let's say, July of 2020. So not much of an extreme. Of course, if you only look at, let's say, a 2 years time frame, then of course it is more bullish than bearish, if that's something you would consider. Moving on to large speculators COT extreme analysis, crude oil is on top of our list, and that's the reason why I am going to analyze crude oil in TradingView using our intraday COT indicator. Let's move to the 5 years chart right away. So we have this 352 report extreme in large speculators position. This, of course, corresponds to roughly 7 years. So we have not seen such an extreme for the past 7 years. It is a bullish COT extreme, suggesting a continuation of the rise that's been going on, of course, from April of 2020. One must have to be cautious, though, because these extremes can grow and grow to much greater levels. Now, at cotbase.com, we actually offer the entire COT history of one market. So you can basically look at what we had in the past. And if you go back in time, we actually see in the history of COT data of crude oil, times when commercials were net long and large speculators were net short. Okay, so that is something important to understand, that even though in a 5 years time horizon this seems super bullish, on a historical all-time time frame, you might come to the conclusion that it actually could increase. Okay, so that's how you have to analyze these COT extremes. The next market is going to be coffee. Here we have 160 report extreme in large speculators. Even on this 5 years chart, you can see what that corresponds with. So you have to go back to roughly 2020 or 2019. It just you can easily see that there's space left for this extreme to get even greater. Okay, again, if you're someone who would be willing to analyze COT reports on a shorter time frame of 2 years, then definitely you are getting bullish readings. If you go over to a 5 years, you can say, well, you know what, it could go even higher. So the next market and last for the classic COT review part of the video is wheat. Here we have 127 report extreme in large speculators. Again, you can see on the 5 years chart extremes that are a bit larger. So I could just simply repeat myself what I said in the case of coffee. But I do like markets where we have a bullish extreme when the market is actually coming down. So this again just suggests that in the medium to long term, we may actually see a bottoming pattern in wheat. In the next couple of months or maybe years, it might happen. So let's move on and have a look at crude oil. This is a 4-hour candlestick chart. As you can see, we have the iCOT scores underneath. And this is the AfterSignal version of the indicator, which means that it will actually filter out signals for you. You can see we have signals coming from this bar, and it would only enter the market on this bar. So you enter into the market on the 6th of November, and you can be in the market on this 4-hour candlestick chart down until the 22nd of November. So that's, and by the way, we do like these stripe signals. And let me just come back over here to the main page and show you, pardon me, iCOT, here we go. So we have some wonderful example charts that will explain to you what these different signals are. So this is a unique indicator that we developed after many years of research. We love COT data. We love the value of stress analysis. However, it is a weekly data, and we wanted to come up with an indicator that follows these rules, but it helps you intraday. So that's what you see in front of you is the iCOT intraday indicator. I standing for intraday, COT standing for COT commitments of traders. However, this is not data from CFTC. It is our own data. So we have these yellow diamonds. These are commercial extremes. Okay, speculator extremes, so the green line extremes, are represented when a candle changes color to blue, and when both are happening at the same time, confirmed by this white balance line here. You can see balance line, that's the little white line over there. Then we get a stripe signal. These happen rarely. However, they're more significant than one signal in itself. Okay, now the intraday indicator with AfterSignal again filters out these signals, and you get in when there's basically confirmation. This blue line is called the confirmation line. So this is crude oil on a 4-hour candlestick chart. Let's move to a 1-hour candlestick chart. You can see on December 1st, we enter the trade at this top, and we stay in the trade. We're still in the trade, right? Okay, so this is a 1-hour candlestick chart, and of course we do get bullish readings, okay, but you really get out of the trade very, very fast. This was the 1 hour. Let's have a look at, let's say, a 15-minute candlestick chart. Here we go, again catching the top. You can see we're getting signals after signals, but we do not enter until we get a confirmation from the system. That's basically the upgrade that AfterSignal brings to the table. And last but not least, let's have a look at what a 1-minute candlestick chart will show. You can see we have a stripe signal over here. However, we do not enter on that signal. We enter at these lows. Okay, and we catch this trade for quite a bit of time. So this was the iCOT intraday indicator with AfterSignal. Thank you very much for your attention. I hope you enjoyed this review. If you have any questions, feel free to send us an email at info@cotbase.com. And I hope to see you in my next COT review. Have a wonderful weekend. Take care. Goodbye.